Hey, what's up everybody? It's your mortgage expert, Brian McCauley here. So you're looking to buy a house in Dallas, Texas, but maybe you don't have a job, but you got a lot of money and a lot of liquid in the bank. Stick around. In this video, I'm gonna teach you about the asset qualifier, maybe the secret you need to getting the keys to the house. So listen, getting pre-approved for a home loan and buying a house can be done in so many different ways. You know, the most popular way obviously is majority of people are gonna send us their W-2, their pay stubs. If they're self-employed, they're gonna send us their tax returns, all of these income-driven financial documents. And while that's fine, mortgages have a lot of alternatives for people that don't necessarily have an everyday salary. They don't run their own business. Even for people that have a lot of money in the bank, a lot of liquid stock, 401k, things of that nature, but maybe just don't have the traditional income, I want to introduce you to our asset qualifier program. This is a really solid program. It's designed for people that have a lot of assets and a lot of money in different areas, but maybe their traditional day-to-day income just isn't there. Again, that could be a self-employed person. That could be sometimes people that are retired at 60, 65, and they've got 2-3 million in the bank. They don't have a day job. They don't have a pay stub. They don't want to spend 2 or 3 million in cash to buy a house, because obviously that's what they've got for a nest egg. So our asset qualifier and our asset depletion literally is able to take the money that people have in a liquid account. You can use some retirement, you can use some 401k, but we do a strange calculation where we take a lot of their assets and we divide it over a certain amount of time, and that amount of time gives us a monthly amount every month that we can use as income. Almost kind of if a retired person had, let's say, $5 million in a 401k and they were taking a distribution every single month for $10,000. They're effectively paying themselves, and that $10,000 would count as our income. Same concept, but they don't have to be retired, they don't have to be old. This is just an asset qualifier for anybody and everybody across the board. When someone is very heavy in liquidity or funds, but maybe they're not heavy or consistent when it comes to a generic W-2 job with a pay stub, even tax returns. So a lot of times this asset qualifier and asset depletion will be a real game changer for people, again, that make money and that have money, but they just don't fit the mold of the mortgage industry when it comes to your traditional income. So it's not going to restrict anybody from buying a house. Or a lot of mortgage companies don't have this asset qualifier, and so people say, well, man, I've got to just, I got to buy this house, and so I think I got to spend $700,000-$800,000 in my liquid in order to take the house down. No, you don't. You get with us, you get on our asset qualifier, you get on our asset depletion program, and we will find a hybrid and a combination to put all your assets together, make those assets count as income, and then we'll use that asset conversion as income to qualify you for the home loan. You don't have to spend all your assets, and you're still looked at doing like a traditional 10-15% down on the asset qualifier. So in this day and age with home loans getting harder, a lot more people having liquid out there, whether it be, again, just liquid money, retirement funds, even crypto is available for liquid and for asset qualifier with certain restrictions, but it does give people the benefit and the help of where they can potentially get a home where they couldn't before by utilizing a unique program like an asset qualifier or an asset depletion. Now you can also do on asset depletion what's called a hybrid calculation. So a hybrid is maybe somebody has a ton of money in the bank and they do have a day job. Well, their assets alone won't give them enough qualifying income where you convert it. Their income alone won't qualify them enough all by themselves, so you melt them together and do a hybrid and say, hey, this person makes $4,000 at their day job, and they've got enough assets in the bank. Once you qualify them or do depletion and convert it, that's another $5,000 a month. So the real day-to-day income plus the asset qualifying income, now that equals $9,000 in income a month, and that person can qualify for the house that they want. So the asset qualifier has a lot of different options. You can slice it up a ton of different ways. You can do the qualifier, you can do the depletion, but the takeaway here is for anybody that's heavy in asset but maybe not heavy in income, don't be discouraged from not buying a house if you're not doing it the traditional way, because a lot of people are taking advantage of the asset qualifier and the asset depletion program in order to put them in a position to buy a home. So listen, I hope you found this video useful. If you did, or you know somebody that can benefit from this, do me a favor, like, comment, subscribe, share it with somebody that you know that may be looking for a house that needs to see this video around asset qualifier, asset depletion. And if you want to have a conversation with me about mortgage options, getting pre-approved, or just the road ahead and what that looks like for you when it comes to buying a house, do me a favor. Call us, email us, text us. We're always here for you. Until next time, stay tuned.